Everyone's worried about the market dropping, right? Before you hit that panic sell button, let me tell you why just looking at charts could make you miss the bigger picture. Stay with me, and I'll show you how to navigate these tricky times. I've been seeing so many comments recently, hundreds actually, from people feeling anxious about the market. It's like our YouTube comments section has turned into a mini stock forum. You guys are debating and discussing stocks like pros, which is awesome. But with so many of you feeling uneasy, it's time we dive into what's really going on. So today, I'm going to break down the top 10 ETFs you've been buying, what they tell us about market sentiment, and whether you should be worried about the charts you're seeing. Spoiler alert, it's not all bad. Semiconductors are hot right now, especially with all the buzz around Nvidia. But here's the thing. SOXL is a triple leveraged ETF, meaning if the market goes up, you get 3 times the return. But if it goes down, ouch, triple the loss. Nvidia is at the center of the AI revolution, and people are doubling down on this ETF. But again, it's leveraged, so big rewards, but big risks. This is a solid choice for long-term investors, tracking the biggest tech companies like Apple, Amazon, and Microsoft. It's a bit safer, but tech is still volatile. You guys really like your leveraged ETFs, huh? It's like going to the casino and betting on red every time. Don't get me wrong, there's nothing wrong with leverage in small doses, but putting too much of your portfolio in them can be risky. We usually recommend keeping speculative investments like these to around 5% of your portfolio. Let's talk about the charts for a minute. I've seen many of you pointing out the triple top formation in the S&P 500, which is making people nervous. Typically, a triple top signals a downtrend, like, okay, it's time to pack up and go home. But here's the thing. Charts are lagging indicators. They only show what's already happened. Last year, between July and October, we saw a similar triple top. People freaked out thinking the market would crash. But what happened? The market didn't crash, it surged instead. The same thing could happen now. We might see a W-shaped recovery, where the second dip isn't as low, and then boom, the market rockets back up. Think of it like this. If you only look at the charts, it's like looking at the rear-view mirror while driving forward. Sure, you need to know where you've been, but the road ahead is what really matters. Now let's dive into the real meat of the story market fundamentals. The S&P 500 earnings outlook is strong. Analysts expect 9.56% growth in earnings next year and 16% growth in 2025. Those are solid numbers. Here's how I want you to think about it. Imagine your favorite coffee shop says they'll give you 16% more coffee next year for the same price. You'd be thrilled, right? That's what's happening in the market. Earnings are growing, and with them, stock prices are likely to follow. These numbers aren't just random guesses. They're based on earnings projections and solid fundamentals. So instead of panicking over a drop in the short term, focus on the bigger picture. Alright, so what should you do when the market gets shaky? Here's my strategy. Don't panic sell. Instead, take advantage of market dips to average down on strong companies. This is exactly what Warren Buffett does. He doesn't care about short-term noise. When stocks drop, he buys more of the good ones. It's like going shopping during a sale. Why wouldn't you want to buy quality companies at a discount? So, where should you be investing right now? Based on what we're seeing, I'd suggest looking at software and housing stocks. Recently, Palantir shot up 14%, and Oracle is seeing massive gains. These companies are leading in AI, cloud computing, and automation. Plus, with interest rates expected to fall, the housing sector is getting a boost. Keep an eye on these industries. They're likely to lead the next surge. So, what's the takeaway? Don't get too caught up in short-term dips or scary chart patterns. Focus on the fundamentals, keep your eyes on the long term, and be smart with your investments. You've got this. If you found this video helpful, don't forget to like and subscribe. I'll be here every week with more tips to help guide you through this market roller coaster. See you next time.